Why would they need to raise that money? Well, it's like money is how you do anything in the world, and especially in business. With this much cash, they can, one, weather out any prolonged bear, and they now have the war chest to weather that out, make acquisitions, start taking on some really big existing incumbents. And so I think there's like an infinite number of things that you can spend this money on. And I think taking the approach, which is default cynicism, that they will kill everything at once, is frankly super ignorant of their own incentives, which is to obviously grow the market.
We're coming up on Permissionless 4, happening June 24th to 26th in Brooklyn, New York. It's the premier conference for crypto builders. Whether you're building on Solana, trading in the trenches, or just curious about DeFi, you won't want to miss it. Mert and I will also both be there. We'll be hosting a Lightspeed pod meetup at a bar, and I'd love to meet some of you in person. Ticket prices will go up, so snag yours early and use the code Lightspeed10 to get 10% off at checkout. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, alongside Mert Mumtaz and Ryan Connor. Today we're coming at you with a Roundup episode. Thanks for joining me, fellas.
Thanks for having me.
Happy Circle IPO day. Company has a total market value of $6.8 billion and an FDV of $8.1 billion I saw today, which is wild. We're recording, I guess, slightly before we'll have more interesting things to say about that IPO. So instead, we're going to talk about an ICO. The major topic of our roundup today, some of the biggest, I guess, token related news out of Solana in some time, maybe since the Trump coin, unless I'm forgetting something. We scooped this week. Blockworks, not to brag, but Blockworks editorial, my colleague Catherine Ross and I scooped that Pump Fund is planning to raise $1 billion via a token sale, which would come at a $4 billion valuation on the tokens. This was, kind of been the talk of crypto Twitter. I think it was some good, caused, some pretty deranged posting from a lot of folks, but it is really interesting news. The ICO component is fascinating. The number that they're looking to raise is pretty fascinating. So what was your initial reaction and how are you feeling about it today?
Well, my initial reaction was to ask for more details because we don't know the details, frankly. I mean, we know certain things, that there will be a token and perhaps a private and a public section to the sale. But beyond that, I find people's comments on the topic to be mostly just a projection of their own existing sentiment of the market, which is not great to begin with. And so roughly every single comment was something like, well, Sol is dead, or they're going to start their own chain, or this is a scam, or something about perhaps the founders being a certain religion. And so just very interesting things, which perhaps don't really get at the core of the matter. And I've had some time to think about it now. And also there have been maybe some clarifications, if you can read between the lines, with their investors on Twitter, for example. And there's a lot to say here, but I don't... everybody's saying, well, how could this possibly be bullish for Solana? It must be net bearish. It must be net shit and pure extraction, because that's the best new word for revenue. And I think there's a few things here. So one is, obviously there's going to be an airdrop. Okay. I don't think that's debatable. I think if you read between the lines in the past few months, that's been very strongly hinted. There will be an airdrop. And so that will be somewhat useful. And I was manifesting this on Twitter, that there should be a large airdrop for the trenches. And so I don't see how that doesn't happen. And then the other part of this is that, what do they need the money for? right? A lot of people are asking, well, they already made, I believe, 700 to 800 million on the year, or since they started in revenue or extraction, excuse me. And so they have made all this money. Why would they possibly need to raise? And well, it's like, it kind of just shows how little people know about business or startups or just being a founder in general. It's like, why would you not take that chance to raise more money to scale your business, right? So everybody thinks of the or maybe let me put it this way. Pump.fund's business relies on what? It relies on the meme coin market, right? I mean, I don't want to say they pioneered it, but they've certainly scaled meme coins. There was meme coins before them, but perhaps not at this scale. And now they're doing other things to grow this market, right? So things like streaming and, I think people mentioned taking on Twitch and whatnot. And that is a very expense heavy type of business. Like, you need to pay some of these famous people a lot of money for them to actually, do these streaming deals, for example. And so on one side, the way I would see this, and if I were them, it's like, my business relies on the meme coin market. I now have de-risked the business such that I basically will never need money again, at least for a very long time. And now I can really take a lot of bold risks to try and grow this market or improve the market as much as I can, right? So if I'm them, if my revenue relies on meme coins, why would I try to kill meme coins? That makes no sense. Like, people think that they will just take the money and then go live off in Monaco and then never give it back or something. It's like, they can already do that. They don't have a need to dilute themselves even more. And so it's very hard to say without the details, of course, but I think the net negative reception makes no sense, because they need to grow this market for them to have a business in the first place. So, like, they have no interest in killing it. That would be nonsensical. And then, there's other considerations around, well, they're making too much money on Solana. Why would they stay on Solana? Which is, I think, a ridiculous argument personally. But maybe I don't want to take up all the takes here, and we can get into that later.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Yeah, I think some of the confusion on it, as you said, Mert, is that it was a little bit of a strange structure. So, something that the original piece that we put out didn't get into is like, is there an airdrop? Is there not an airdrop? And, Catherine and I were hearing things, but there was only so much that we could get well confirmed enough that we felt comfortable like reporting it and presenting it as truth. But I would agree with you, Mert, that gun to my head, I would say there will probably be an airdrop, and just game theoretically, I would think that Pump would need to have it be a huge airdrop, just based on how much money they've made and the optics of this whole thing. And so it seems like it's maybe a little bit of a novel structure where they're combining like an airdrop with an ICO with some portion going to like founders and initial investors and stuff. And then it also seems to me like some of this ICO is going to like institutional investors and things like that, and then a larger proportion of it is going to be sold to like publicly. So that seems like the way it'll go off. I guess, Ryan, I'll bring you in now, our resident pump fund bull at Blockworks. Did you like pray in front of your shrine to Pump Fund after this news? What was the reaction?
No, I think it's really interesting. Like, I think obviously like a long time coming. I think the market, understood that there would eventually be a token, but like the question was just when. they're so profitable. Like burn is like probably obviously very low just in terms of like the cash cost to run the business. Like Mert said, over 700 million in cumulative revenue since the product was launched. Like there wasn't a crazy immediate need, but people who have interacted with the founding team know that they are highly ambitious, right? That they have that they talk a big game. They have a grand vision. They have big plans. They're tapping into live stream, potentially getting like a social network effect on top of the marketplace network effect, which could really make the product sticky. I'm just really interested in use of funds and the strategy going forward. I think that that's the most interesting thing. Like, I am a pump fund bull. I do believe that the market underappreciates the viability of the business model, its longevity and staying power. But there are, it's not a perfect story. And I think that the biggest hole in the story is that they don't own discovery and they don't own all of the front end. So, launch pads are essentially a commodity service. And while they do have marketplace network effects, because they are such a commodity, there is, and they don't own discovery in the front end, there is a potential that they could be disintermediated. So my thinking around use of funds is like, are they going to, build an Axiom competitor? Are they going to further develop PumpSwap? Are they going to build a wallet so that they really, really own that front end distribution? And then if they own that front end distribution, like that, like makes the chain story much more exciting, right? But I don't think that they can, do that long-term vision of their own chain. Not saying that I believe that they are planning on doing their own chain, but you really can't do that unless you own distribution, or else you just push yourself further and further away from the user. So I'm most interested in the strategy going forward, and we likely won't get a glimpse of that until like the funds are raised and we see them shipping new product.
Offline, away from engagement bait land, and more just in when you speak to investors or things like this. I think the pump proposed token raise is pretty or polarizing, I guess you could say, as far as the way people look at it. I think one question that's emerged repeatedly is there $1 billion in demand for a pump token? So do you guys think that they can pull off say they are trying to ICO $1 billion worth of pump? Like, is that going to be possible for them?
Yeah, I mean, that's the big open question. I think it's really exciting. I'm excited to see the ICO. Like, the team internally, the Blockworks research team, it's kind of, we say it all the time. Like, we think that 99% of crypto is short this product. They just do not believe in it. They refuse to believe in it. They refuse to acknowledge the earnings power. But now I'm seeing that, Jack, the numbers better than me. I think they raised over 100 million from VCs. Like, perhaps that 99% number that we think is intellectually short pump is wrong. But we'll see with the ICO. Like, raising $800 to $700 million on chain is a lot for a product that causes such visceral reaction from the crypto community at large. But I think cooler heads will prevail in the end. I think there's obvious earning power here. It's like a very talented team. There's a whole suite of things that they can do with the use of proceeds. And the earnings power now is like undeniable. I think when the Libra coin launch happened, everyone was certain that this product was done. Blockworks research made sure that people understood that it was still a top earning product week after Libra, and remains a top 1 or 2 earning on-chain product today. And I think the market is like finally starting to realize that. So I don't know, like, gun to my head, do I think that they raise the 700 to 800? Like, I think yes.
This is totally speculating here. I have no knowledge of this, but to me, seeing a $1 billion token sale felt like a little bit of a middle finger to everyone who's criticized pump and called it extractive and called it transitory and all of these things. It's like, hey, you don't respect our product. You don't think that there's any use case here. Like, let me show you how I can raise $1 billion in an ICO, which hasn't been done for 8 years in crypto, or whenever the Block One ICO happened. So it feels like a purposeful move that's like, hey, we can do this and we're going to show you that we will. I would imagine there will be some kind of other, like some kind of way that Pump tries to make this token feel like a good investment. Like maybe there's buybacks, maybe there's value accrual, like maybe it's the native token for their like Twitch streaming thing they're kind of building out. You can't just pull a Zora if you're Pump Fun. Like you can't just, announce a token out of nowhere, drop it just for funsies, and then kind of watch as the chart goes down and down. You have too much to lose. You're too big of a business at this point. So I would imagine that they'll find some kind of way to drive value accrual to the token and actually like pay attention to it. And maybe that will help drive some of the demand. But as things currently stand, if this is just a meme coin token, I don't know. It's hard to imagine there's $1 billion in demand for it, but it's also maybe good because I think the airdrop thing that we saw throughout 2024 repeatedly is just bad for everyone involved. It's like people asking for free money and then getting upset that they didn't get enough free money. The chart nukes, or you pay some shady market maker to, help you last a little longer before the chart nukes. So maybe ICOs are a better way to go about these things. I don't know. The token launch aspect of it will be interesting for a lot of reasons. I guess before we get into some of the other implications, do either of you guys have points on this token sale itself, the 1 billion at 4 billion that we didn't get into?
Yeah, I mean, when you hear raising 1 billion at 4 billion, it seems it's really, really attractive, right? 4 times cash post money. That's like, if that's the case, you drop most of what you have and you allocate. Like this is a really phenomenal business. It's unlikely that that's the actual split. I think what you want to focus on, and again, this is like for the VCs that see the term sheet, but there's going to be likely some split between like burn or what labs accrues, right? So you actually want to focus on what's going to actually accrue to the token. And, I think it's pretty unlikely, given the valuation that we're seeing, that it all accrues to the token. I think there's probably going to be some split, but I do think that the token's going to accrue value. And like kind of like reading between the tea leaves, if you look at a lot of Mike Dudas's recent appearances on podcasts, he talks about how going forward, if you are a project and you launch a token, it has to have some value accrual mechanism. And you're seeing in the market, tokens without value accrual mechanisms launched by project teams, like they asymptote to zero. So, given that Mike is a early investor in Pump and has a good head on his shoulders and like is highly influential in the space, like I think it's pretty high probability that there's a value accrual mechanism to the Pump token, which should make it attractive to, the more long-term fundamentals oriented investors. The question at the end of the day is how much, and then what the valuation is after that.
The reason I haven't talked too much on this episode is just because it's very hard to make or form good opinions given the lack of details on my end, at least. So the question is, why would they need to raise this much, for example, right? And unless I am them, I have no idea. Now, why would they want money is, you can frame it that way, which is like, why would they want money to grow their business? And it's like, well, they're ambitious, as Ryan said. I think if you want to just, and if you look at venture, maybe not even in just crypto, but like all around today, you're seeing quite a few colossal rounds. Now, granted, obviously people will say something like, well, those are actually much more important technologies or something like this. And okay, we can debate about the importance of the tech, but fundamentally, if you're a business, you want to build things and create things. And to do that, you need money. And specifically, for example, you need to, in the case of Pump, if they actually do want to take on Twitch just for a thought experiment, that's an extremely hard thing to take on. Now, I don't see why they couldn't. They've obviously shown they can execute. Right. So like the other part of this is like, oh, well, like they just keep extracting money and like they're these greedy people. And it's like nobody's forcing anyone to use Pump. Right. There are certainly other ways to launch tokens. on different chains, on different everything. Yet people still use pump. And it's worth asking why this is the case, right? Why are users willingly paying more money than they, let's say, need to launch on this thing and this thing alone? There are competitors now. Why are they still strong in the market? And it's like, well, they clearly have built something people want. You don't need to agree that the thing that people want is morally good. That's irrelevant. What you need to accept, though, is that people are paying for it, right? There's no state mandated, law to say you must use pump.fund. They just use it. And so we know for sure that as a function of that they can execute, right? That's not easy. Everybody thinks, oh, well, they just keep extracting money. It's like, okay, you try making a platform that makes $700 million in revenue on the first year. Like, go ahead. I've tried, okay? It's not so easy. In fact, I don't think anybody's actually done that fast, if I remember correctly. Maybe Hyperliquid is one that comes close, but like with the exception of those two, nothing comes close. And so with the money, well, the more money you have, the more risky bets you can take. So for example, you can start looking more into M&A, right? Let's say they are super weak in one area, or the team expertise is just not there. Maybe that is buying out like a small social media network, or maybe it's doing more infrastructure. Maybe it's buying out like DeFi teams. Now they literally can buy teams, right? And expand that way into other competencies. Or maybe it's a very regulatory heavy business, right? Obviously they've been maybe somewhat lax on that, but like that's not always going to be the case. And that stuff is super expensive. Or maybe they really want to use that money to drive value to the token itself to make it a worth investment, which is not a cheap thing to do. Right. And they need some buffer to make it, to de-risk it, right? When you raise money, really what you're doing as a startup is you're de-risking your next few shots, right? And you're doing that via two ways. One is by scaling what you already have, and then two is by taking new shots. So to maybe cut it shorter, it's like, why would they need to raise that money? Well, it's like money is how you do anything in the world, and especially in business. And with this much cash, they can, one, weather out any prolonged bear, right? I think people in crypto maybe forgot what an actual bear market looks like, but like sometimes they happen and they're quite bad and they take very long time. And they now have the war chest to weather that out, make acquisitions, M&A, mergers, whatever. Obviously, I doubt they would merge. They can start taking on some really big existing incumbents. And I do want to make it clear that this is a point that should be taken seriously, which is that their entire market and revenue and future relies on this crypto meme market. Okay. And so they have more interest than anyone to grow that market and to improve that market. Right. And so people thinking that, well, this is what will kill memes, it's kind of paradoxical to me, because it's like they're raising money to improve that market. Now, of course, we'll see if they can execute. But if they want to just max extract and leave, you can already do that with $1 billion. You don't need another billion. So that's how I look at it. But I think, and maybe like another part of this that I didn't mention is like MEV infrastructure, core DeFi infrastructure. I think these are things that they'll probably start looking into more. And like, you want to really make good acquisitions and make super deep investments, which are going to be super expensive because that's a very high value supply chain. And so I think there's like an infinite number of things that you can spend this money on. And I think taking the approach, which is default cynicism, that they will kill everything at once, is just frankly super ignorant of their own incentives, which is to obviously grow the market.
I doubt that Pump Fund is going to take this billion and go, dip off into the sunset. But I think a question that emerges there a little bit is, okay, like Pump already has 700 million. Why haven't they been more aggressive in the M&A market? And like why haven't we seen more, I guess, development on the app side? Because, they launched a mobile app, they built obviously an AMM, but I don't see any of that as super ambitious bets. It's kind of just a like consolidation of the core business they're already building. If you compare this to something like Jupiter, which I think has done a really good job of diversifying and buying other businesses, and like, they have their killer product with aggregation, but now they bought like Drip, like it's they're doing like kind of random stuff now. So I don't know what's Ryan. I saw you wanted to chime in, but I wanted to break in there because I think there's an interesting point to be made about like why has Pump taken the path it's taken so far, given how much money it has.
Yeah, so I think that you want to assume like, I don't know, 50% margins or something like that. It takes money to run the business, so perhaps they don't have the 700. It's probably, I don't know, 400 or something like that, give or take. Haven't done the math myself. Yeah, like, look, I think what you're getting at is something realistic where there is a problem with having too much money. Organizations that run lean, they have a sense of urgency. And when you have a huge cash cushion, which we've seen with a lot of foundations in crypto, it can be kind of a curse. Some organizations have done a really good job with a large cash cushion, like Solana being one of them, Helium perhaps being one of them. But it could be a curse to a lot of teams. So we'll have to see if Pump Fund can handle like having a huge war chest. I do think that there's a lot of legitimacy in the M&A thing, but you want to see discipline. I think historically what you've seen in crypto M&A is that it's kind of lacked discipline. So seeing what Pump does purchase and if it's, synergistic to the business is going to be pretty critical. The legal war chest that, they might have to deploy if they want to make this thing global. I assume it's mostly US centric today. But if you are like, think of what Uber was doing. Uber was burning like $1 to $4 billion per year as late as 2020, fighting local taxi regulations, right? And like, it's not exactly the same, but on a global scale, security laws per geography is going to be pretty expensive, and you want to be prepared for that. I think the most interesting thing actually is more of a boots on the ground effort, like advertising to like gambling adjacent people or crypto adjacent people who use DraftKings on a daily basis, people who are, engaging with Twitch creators on a daily or weekly basis. Starting a network is really hard, actually. I think a lot of like retail discourse ignores how challenging it is. People assume that, Instagram just spun up one day and then the network effect happened and everyone uses it. It's actually much harder than that. Andrew Chen of A16Z has a really awesome book called The Cold Start Program, the Cold Start Problem, where he goes network effect business by network effect business and looks at how they actually bootstrap that network effect. And it's boots on the ground. It's having employees. It's like going door to door and signing up the supply side. Like, that's what Uber did. Airbnb went to the doors of specific people and told them about their product. Tinder went to college campuses and like recruited individuals to use the app. It's like a really challenging thing, and you need cash to do something like that. So, look, cash is a curse, but it can also enable you to like build a very, very strong network effect business, and we'll see what they do.
Do you think Pump needs to own the front end to succeed long term?
Yeah, I do, because if they don't, then they're essentially like in the middle, right? Like, I think crypto is interesting. I think it's like very obvious that the base layer gets a lot of value because, they own what can get into the block and what doesn't. And then, just as with any other technology internet-based market, you have aggregators on the front that, because there's so much to do, the value is in providing or in aggregating resources to consumers. And, you're seeing that today with the Uniswap front end. You're seeing it with the profitability of wallets. You're seeing it with Axiom. You're seeing it with the centralized exchanges. So, what Pump ultimately provides is a commodity service for launching arbitrary assets. And, sure, they were kind of like first mover in aggregating that. But historically in crypto, first mover advantage is not enough, and you could be disintermediated away. So yeah, I think it's critical that they own the front end, and I think it's probably one of the first things that they'll do.
I also think, just taking some moonshots here, raising $1 billion, if they do raise it, I'm not sure if they will. And I think if they did, it would be mostly from funds that are sidelined anyways. Like, I don't think it would be, people think it'll be like the trenches draining money, but like the trenches are not going to put in buy orders of $50 million or $100 million, right? It's just not going to happen. I think an interesting thing is everybody thinks that they might, the rumor meme, I'm hearing things, everybody thinks they'll start some blockchain, L1 or L2, and maybe they will, I don't know. But it seems to me like what they would actually do, and given comparable scaled businesses, it seems to me like they would actually start an exchange, right? Which seems to be by far the most profitable and most impactful thing to do in crypto, right? Binance, Coinbase, Hyperliquid. It really seems to me like that much money would need to go towards something that's that ambitious. And like, to be clear, I don't think there's that much competition in exchanges still. For centralized exchanges, there's Binance and Coinbase. Coinbase is basically only in the US. It's relatively weak internationally, I would say. And then Binance is super strong everywhere else except the US. And then there's Hyperliquid, which is some combination of both. It's hard to describe Hyperliquid, but it's basically a centralized exchange with much more crypto properties. And so it seems to me like Pump would try to do something like that, and maybe even try to acquire an exchange. That's just me putting on my tinfoil hat if I were to guess their next move.
Think about like next 12 months. Does Pump do their own chain or start an exchange? I think start an exchange is much more likely. Getting regulatory licenses is, I think, to get closer to the user is much more likely than starting your own chain, which I think removes you from the user. People try to analogize in crypto markets or try to analogize crypto markets to traditional technology markets, where when you vertically integrate, you don't typically lose distribution, but you do in crypto. So when you vertically integrate, you start your own chain. You need to get all the centralized exchanges to integrate your chain. You need to get the bridges and the solvers to integrate you. You need to get the wallets to support you. It's not that easy. And you go from typically being 1 to 5 clicks from the user to like 5 to 10 clicks from the user, and you present significant risk to your business if you do that. So I think the long history of crypto shows that many projects have failed starting their own chain, much more so than have succeeded. And I think that the Pump team is well aware of that. It's just too early, in my view, to go and take that risk. Perhaps it's a call option because you can have your own chain and you can still have the on-chain business. But I think if we're thinking like over the next 12 months, what's likely? Like, I just don't think a Pump chain is likely.
Today's episode is brought to you by Ledger. Ledger is a secure hardware wallet for your SOL and logins, trusted by 7 million users, and securing 20% of the world's digital assets. It's built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and assets. With Ledger Live, you can seamlessly manage and stake your SOL and now your SPL tokens, all while staying secure. From Bonk and Pengu to Jupe and Ray, 130 SPL tokens in total can now be bought, managed, and swapped on the go via providers like MoonPay and Exodus from the security of the Ledger ecosystem. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Maybe a more interesting direction that I want to ask you about, Mert, is I think we've agreed like it's unlikely that Pump builds an L1 or something. But what is to prevent Pump from building some kind of L1 or maybe to me more convincingly an L2, where it's like, hey, I'm Pump. I generate a ton of revenue for validators and stakers on Solana. I want to increase my take rate on that. So I'm going to move the transaction execution to like my own sequencer, capture all the fees on that, and then settle that data to the L1. So I still get the Solana network effects or whatever. What would prevent Pump from doing that?
Well, so there's roughly two different kinds of startups, I would say, or different phases in a startup's trajectory. There's growth mode, which is, as Ryan pointed out, something like an Uber, where Travis, for example, would just spend hundreds of millions of dollars on just like, we need to blitz this market and just blitz scale and go all in, take it over, we're in war, et cetera. There's like that type of mentality. And then there's roughly let's say the Amazon or let's say Walmart type of mentality, which is like, watch those margins, really cut down those costs, use a pizza box for your table, no lavish equipment at the workplace. So there's like those two dichotomies for any real business or startup. And so, okay, what's the incentive for Pump to launch their own chain? And everybody has phrased this in such a way to say, well, what if they want to increase their take rate? Which basically just means, what if they want better margins, right? And margins are, very roughly speaking, you have an income, a net income, and then you have your net expenses, and then the ratio of them to what's left for you, and then the percent difference is basically what your margins will be. And it's like, okay, if you're making, and maybe like, I have no insight into their operations. So like, assume they made this $800 million by being on Solana, by the way. Like, it's not the reason they made $800 million that they're on Solana, but they have made that much money while on Solana. So you can probably reasonably conclude that Solana is not actively capping their growth, right? At least it's certainly helped them become the fastest revenue growing operation in history. Okay, so it's like not so bad, all things considered. And it's like, okay, do you think that they would raise $1 billion if what they cared about was increasing their margins from, let's say, 80% to 85%? Like, if I'm their VC, I'm going to say, what the fuck are you doing? That's extremely boring. I'm looking for a billion X here. I'm not looking for you to, increase your margins by N%, which is going to be single digits. And it's not for free either, right? Because when you do that, you need to then, as Ryan said, you need to get your own distribution. You lose out on the underlying liquidity, all the integrations, and you now have to have an entire full-time team. You need to, get Phantom. You need to get all these different exchanges. So it's really not a free lunch. Like, to increase that margin, to increase that take rate, and let's say reduce your leak, you need to do a tremendous amount of work. And all that work just to increase your margins seems like a pretty early optimization to me. If you want to actually grow, which it seems like they're in growth mode based on how much they're raising and the shots that they're taking, if you want to actually grow, you're going to focus on bold bets. And this is what I meant earlier with, you're really using that money to de-risk the bold bets that you'll place, which is like, taking on Twitch is a much more interesting proposition than building the 100th L2, right? Because anybody can do the latter. Anybody can launch this L2 with one of these roll-up as a service providers. It's probably not too hard to launch like a mediocre L1 either. And so then it's like, what is the actual incentive for them to launch this L1? And I think people in CT especially are so preconditioned to only think in terms of L1 and L2 that they forget that what matters is the business, right? And to grow a business, there is no example of any company or app or even really rationale that says that if you go and launch a blockchain, you will grow 100x or 1,000x, right? Like, the one parallel you could make is like, there's the L1 premium, where if you launch an L1, then your token gets valued, at a premium for whatever reason. But it's like, that's a very competitive field. And it doesn't really grow the market in any way. And it seems to me like they want to grow the market. And so the short answer, I guess, is the incentives for starting your own chain are just not aligned with what they've done or what they need to do. And it seems to be like a take rate optimization, which is fine, but like that's not going to, especially if you're now raising, let's say there's a private sale here, and I believe there will be, like, you can't sell to those VCs that, hey, instead of making 800 million, and like, I don't know what their profit is. Let's say their net profit is like 500 million. Now it's going to be 600 million, probably, assuming that we can actually keep the distribution that we get from the L1, from Solana, right? That's just not a very attractive proposition. I think the much more attractive proposition is like, look, we're literally going to redefine how crypto and media interact, right? We're going to look at the entertainment and social aspects of this business and really take big shots and go for the next 10 to 100x. That seems to me like it would make more sense. And it's like, from the Solana point of view, I mean, if they do decide to go on another chain or launch their own chain, it's like, as somebody on Solana, you need to then ask yourself, like, okay, why do they do that? It's like, what was insufficient about Solana such that they need to do this, right? And it's like, well, first, Axiom, Pump, all these guys, Phantom, Magic Eden, Jito, Jupiter, all these guys started on Solana. They made hundreds of millions of dollars. So even if there's an issue, it's probably not as bad as crypto Twitter would suggest, because those are the highest revenue generating business in crypto, and they're all on Solana. So like, it's like, clearly the problem is maybe overly cynical, the problem statement. But it's like, if they do this, it's like, what would it be for? And if it's not going to be take rate, then it's going to be for something like user experience, right? So like, one like good example you could give is the transaction sending being shaky on Solana during super high congestion periods. And it's like, yeah, I mean, that's fair. I think that's a problem as well. But it's like, those things, just like the last NFT season where Solana would go down due to these heavy mints, and then now it was fixed. Those things we're working on super actively in the background. So by the time this even happens, because like launching an L1 doesn't take, a short period of time. By the time this even happens, we would have already incorporated things like Alpenglow, some of the new Jito's new work, some of Helios's new work, and all these new Firedancer, et cetera, such that the chain would have already learned from those mistakes, right? And so like, the worst case for Solana is not so bad, all things considered, in my view. Like, I don't see any concern for panic.
Did you also touch on application specific sequencing? Because I feel like whenever I ask people, or like in recent months when I've been like, hey, what if Pump launched an L1? They'll be like, well, app specific sequencing is coming, so that's going to like make it no longer as attractive of a thing for them to do.
Yeah, I mean, it is coming, and like, there's other ways to get there. And like, I think crypto people have this weird tunnel vision where they just hyper fixate on the most random shit. Like, oh, if Pump controlled the transaction ordering rules at the very core level of the L1, that would really send their business through the roof. It's like, no, it wouldn't. That's again, a specific optimization, which, by the way, you can already get creative and do this, right? Like, you can kind of put certain things off chain and then only touch the chain when you need to. Like Polymarket, for example, is a massively successful app that barely uses the chain in some regards. And so like, Pump has a bunch of much shorter cost and shorter time horizon optimizations they could make in that way, that it's like, I just don't see it. Like, okay, if you're like something like Hyperliquid, where your entire business is on chain, presumably, it's like, okay, then application specific sequencing and like super hard tech stuff like that makes a lot more sense. But like, Pump is not, like, I think the question to ask is like, how much is app specific sequencing going to help grow this business, right? Or launching an L1. Compare that to how much is taking a share of the global media and social media and entertainment, let's say pie, and maybe changing, like literally defining a new category within that, going to grow their revenue. And the latter is much more ambitious and risky, which is why they need money. But if they can succeed, that's the real jackpot, right? That takes them from $1 billion business to a $10 billion business, versus adding apps-specific sequencing or your chain does not do that, as far as I can tell.
Okay, so this week we are trying a new segment in the Roundup. We have an awesome community around Lightspeed. Lots of you that follow along with us on Twitter are in our Telegram chat and so forth. And so we're going to start, if this goes well, trying to do a listener mailbag more often, where we take questions from you guys and then answer them live on the pod. So I put out the bat signal in the Lightspeed Telegram group. You should join that if you're not in it. I think the link is on our X account. I have 3 questions here. We're going to do like lightning round style, I guess. I'll just throw them out to Ryan and Mert. Whoever wants to answer, knock yourself out. Okay. Listener mail number 1 from that guy. Does the Solana leadership and top influencers see projects like Hyperliquid and BNB Chain with less than roughly 50 validators, but successful by most metrics, and think we can afford to further centralize down to sub 100 validators if it means juicing performance more? So basically, would Solana think of reducing its validators to be more performant?
Well, I would say Solana has made itself this successful due to a pretty ruthless focus on pragmatism and learning from the market and user feedback. And if we truly believed that reducing the validator set would actually increase, let's say, the UX or performance of the chain by a non-marginal amount, right? For example, 5% increase or 10% increase is not going to be enough. It needs to be a multiple. If that actually would help, then certainly it's something we would consider, right? I'm speaking for myself here. Of course, I can't speak for everybody, but I think having known basically everybody in terms of leadership on the chain, I would say they probably agree. I think though that we wouldn't basically get stuck up in ideology and say like everybody must validate with a Raspberry Pi at home. And like that's the thing that we're just never going to cross. And it's like, okay, that could be useful for certain ideologies, sure. But our ideology is to win, and like actually bring internet capital markets to reality. I don't think, for what it's worth, I don't think that reducing the validator set to like 50 or something would do anything meaningful, or 100. Like Hyperliquid has a lot of benefits, but like they are co-located in the same region in the world, which is like they're already doing that. So what's the point in us just doing the exact same thing? The way that Solana is architected is that the overhead of introducing additional nodes does not interfere too much with the performance of the chain, which is why sometimes I say something like, this is the only chain that maxes both performance and decentralization, because it's designed in such a way that these additional nodes don't actually cause a huge burden. But like, if you want to do that, then there is no reason to really build Solana to begin with. But like, okay, the short answer is, first of all, we take that very seriously. Like, we're not like certain other ecosystems where we're like, oh no, we already won. We're superior because of such and such. It's more like, yeah, I think Hyperliquid's a great product. And it's like, how do we improve Solana to compete on the product level? I don't think that reducing the validator set does that. Something like app-specific sequencing probably is a closer bet, which is why we're already working on it.
Reaching once again into the listener mailbag, we have from Christy Claudy. Christy, thanks for writing into the show. Would love to hear his thoughts on Alpenglow and other upgrades that was announced during Accelerate. I would think his refers to Mert, but I'm going to throw this to Ryan because I think question 3 is a Mert question. So just trust the process here. But Ryan, you are the his in this instance. What did you think about Alpenglow and Accelerate?
Yeah, I mean, I think it just showcases how I think the Solana ecosystem is always kind of thinking outside of the box and questioning assumptions, and it's what you like to see. I think that the other interesting thing about Alpenglow is that the Anza team. If you looked at like historical validator performance, it was kind of always trailing, and then I think that they really ramped up their efforts and they made key hires, and folks like Max Resnick, who, I mean, it shows what a talent that guy is, right? And how sad it is that an ecosystem had to chase him away. Like, why would you do that to like such a talent? I have no insider information though. I don't know the Anza team well, and I don't know Max, but it just seems like they're really capturing the minds of the Solana ecosystem over there, and it's really impressive.
Ryan, let me throw a follow up to you, because I think an interesting analog to Alpenglow is the ETH merge. They're not exactly the same, obviously, but Alpenglow is probably the most consequential upgrade Solana's ever undergone. And the merge at the time was the same for Ethereum. So from an investor perspective, maybe how do you think through that? Because I remember, I was reporting at Blockworks in 22 when the merge happened, and everyone wanted merge content all the time. We were like, every day I had to, go ask investors what they thought about it. And ETH pumped a ton leading up to the merge. And then it was like big time, buy the rumor, sell the news. When the merge went off successfully, everyone kind of sold off their ETH, and really, ETH hasn't done well since the merge, as we've come to know. So, I don't know, this idea of like, major upgrade coming, big promises being made, like just as an investor, maybe how do you navigate a world where we see an upgrade to Alpenglow and Solana becomes more performant or whatever?
Yeah, I think you have to take performance seriously, but not too seriously. I think we exist within a crypto market that's much more mature. So where performance optimizations and TradFi, like, they're just assumed to happen, and a hedge fund manager might not get too in the weeds. They just kind of want to know the direction, and what's more important are distribution and relationships and how you're going to acquire customers. I think that that's more or less where we are in crypto. I know the technical stuff still matters, but Solana has such a lead there, and even where competitors are planning to go, it doesn't even really compare. The most interesting thing about what Solana is doing, from my perspective, is the fact that I'll meet a founder and they will, without being prompted, tell me how fantastic the Solana Foundation is and how happy they are to be working with such a high performing organization. Like, those bits of news that I hear on the ground from founders matter much more to me personally than a technical upgrade. I know where Solana's technical ambitions are. I'm pretty confident they're going to get there from just historically executing on promises. Like, that's all that matters to me personally.
Last question from listener mail. We have Avant here from Shard Space. Very active member of the Lightspeed Telegram group, I would say. Thank you, Avant, for writing in. He says, question for me is, what is Solana's long-term scaling strategy? Apart from multiple concurrent proposers, focus at the moment appears to be on optimizing the existing stack rather than how to scale it. What is the scaling strategy beyond optimizing the existing tech? Or is scaling via optimization the only path being investigated? E.g., FireDancer is about optimizing the existing code base to increase throughput and not truly about scaling the architecture. Mert, do you want to take this one?
So the way performance engineering and scaling works is you build a system, and then you use that system in production, and you generate lots of load on it, and then you look at the bottlenecks, right? And then you fix those bottlenecks, and then you see what that would imply, and then you see what the new system looks like. Otherwise, you're going to be... So distributed systems, by definition, are extremely complex because you have a bunch of moving pieces, and you have to worry about exponential number of interactions between them, right? Like, if you have 8 pieces here, and each of them can talk to each other, that's a lot of different interactions you need to worry about. to such an extent where you cannot design that on paper, right? Like there's so many emergent properties, so many different things in production that you would never see, that the only thing you can really do is come up with a simple architecture that scales in principle, see how that behaves, and then keep tuning and fixing the bugs, right? So that I would say is, and by the way, you can go very far with doing that. So the current Anza team, that's the approach they've taken, and they've uncovered pretty crazy bugs, like where, Turbine literally will not work for like the last 3 out of 4 slots during a leader period, which is like crazy. Or like just extremely stupid shit, like copying the same code and or copying the same data structures and redundant stuff like this. And then like that's how you generate the new insights that allow you to really scale something. It's quite similar to like a race car, where like if you watch F1, or I mean, you don't need to watch F1, but you design the car, you take it on the track, and then you're like, oh shit, the car, even though the engine is super strong and like the tires have great grip, the weight's not strong enough. As a result, it's not turning corners well enough. And it's like, how do we solve that problem without destroying everything else? And so the scaling strategy is like, first of all, there's only one set of problems on Earth that are insolvable problems. And those are the laws of physics, right? So provided that you have the laws of physics in mind when you're designing a system, every other problem is soluble. And that's what really drew me to Solana in the first place, which is like the concept of increased bandwidth, reduced latency is basically a shortcut for saying we're just going to leverage physics as much as we can. And the bottlenecks today, and especially after async execution goes live, which by the way, I would say is maybe more of an interesting scaling stepping stone versus multiple concurrent proposers. MCP is more for censorship resistance than for scaling, versus async execution is much more for scaling. And then like the overwhelming bottleneck will always be bandwidth, right? So the packets sent over the network, that's always going to be the bottleneck. And so you take a full stack approach to that, which, you have things like double zero. But then you have things like a new consensus mechanism, which utilize that bandwidth much more effectively. And then async execution, which makes the utilization of that bandwidth even more effective, right? And then you do all those things, and then you find new bottlenecks and new problems, and then you fix those again. But what you definitely don't want to do is like the traditional approach, which is write a paper and then assume you've solved all the problems because they're like theoretically solved on paper. But then what happens is you're a human, and so you can't consider all the nonlinear complexities of a system. And then they happen in prod, and then you're fucked because you designed the system in such a way where you can't quickly pivot and fix the bottleneck. And so the short answer is the scaling strategy is definitely fixing the bottlenecks and making those optimizations. But that allows you to generate new insights onto what core architectural changes you need to make. And a great example of this is optimization, and then Alpenglow, right? And then async execution, for example. Like they go hand in hand.
Well put. We have one more here from Jason Janowitz for Ryan, which is, why should people go to Permissionless 4 in Brooklyn later this month?
Best crypto conference in the Western Hemisphere in 2025. And there will be a dunk tank.
And there will be a dunk tank. And I think
you're participating.
Hopefully not. I don't know. I haven't been asked about this. I'm going to go to HR. I believe all three of us are going to be there. But there is my plug. Come hang out with us. Come talk about Pump Fun. Give me the good gossip on what the Pump airdrop is going to be like, if you'll be there. Yeah, that's happening June 24th to 26th in Brooklyn. Get your tickets. Use Lightspeed 10 for 10% off at checkout. It's gonna be a sick conference. You should be there. Thank you everyone for listening. Please give us a 5-star rating, subscribe to the pod wherever you get your podcasts. If you enjoyed this episode, please share it with a friend, and we will see you all again very soon.